What's going on, you guys? My name is Zach Hartley and welcome back to my weekly watch list video. In this series, my goal is to share with you what stocks are at the top of my watch list going into the week ahead, how I feel about the market conditions, and I try to share a little piece of knowledge with you each and every week. So if you get any value out of that, remember to click the like and subscribe button, and let's jump right in. Okay, so to start us off here, I usually like to go through the NASDAQ, the Dow Jones, and the S&P 500 just to see how the broad market is doing and so we can understand the big picture behind the markets before we start diving in to individual industries and individual stocks. And when we look at the NASDAQ here, it is not looking so good. You can see we hit a high of around 16,200 and we are now trading at around 10,800. So we have seen a pretty significant pullback, and I have drawn a line here right around this 10,000 mark, and this was actually the high prior to COVID. And as you can see, we made some major gains since COVID, but we are now giving almost all of them back, and it looks like we could come down to test this 10,000 level on the NASDAQ. So I'm watching that one very closely. When we look at the S&P 500, it is also very clear that we have given up a lot of the gains since COVID, and it looks like we are very likely going to come back down and test those pre-COVID highs. So it's going to be very interesting to see what happens here. It looks like we could see a little bit more pain in the S&P 500 as well as the NASDAQ, but the Dow Jones, as you can see, is actually currently testing the highs prior to COVID. And so you can see we hit 29,700 right here. We are currently at 29,800 right now, and it is a very clear test of the previous high. So that is what our broad indices look like. Basically, we are in a major pullback right now. We are in a bear market right now, and hopefully we find some support at the pre-COVID highs. Now, when it comes to Bitcoin, there's not a whole lot of support in sight. It looks like we are falling off a cliff. It does not look good at all. I thought we might have some support around 30,000. Then we fell to 20,000, and it looks like 20,000 isn't even going to hold up for us. We're currently trading at around 19,000 as I film this video, and the reason that crypto is falling, the reason that Bitcoin is falling, is because people are losing trust. The only reason that Bitcoin would go up in value is because people want to buy it, and the reason people buy Bitcoin is because they trust it, they think it has utility, and it'll be more valuable in the future. However, with what we have seen from the Celsius network, with what we have seen from Luna, with what we have seen from NFTs in general, a lot of people are starting to lose faith in crypto, and when that happens, there's no need to hold Bitcoin, and that's why we're seeing a sell-off right now. Long term, I do think Bitcoin will probably recover. We'll see what happens. My Bitcoin miner is kind of hovering on the brink of profitability right now, so I definitely need to go back up to make that single investment worth it, but we'll see what happens over the next few months here. I do think we're going to see some volume step in here and start to buy up some Bitcoin around 20,000. We'll just have to see if it's enough volume. Now, when it comes to earnings, there's not a whole lot going on this week. We've got FedEx and BlackBerry as well as Carnival and a couple of other companies, but none that I really follow too closely or like to trade. One thing that you do need to know about, though, is the federal interest rate. It just increased by 0.75%, which was the highest increase since 1994. This is dramatic. This is the Fed trying to get a hold of inflation and trying to cool down the economy. The problem here is that they might be cooling it down too much and sending us into a recession. However, the Bank of Canada also did something similar, so it looks like all of North America basically is on the same page with what needs to happen here with regards to inflation, because as of right now, inflation is, as you could say, out of control. We just saw the numbers from May of 2022, came in at 8.6%, which was actually higher than the months prior to that. This was a new high, and it was the highest since we have seen since the 1980s, which means none of us have ever traded in this environment. Most of our parents probably haven't even invested in this environment, and a lot of people don't know what to do, because if you put your money in real estate, the interest rates are rising and the value of your property is probably going to decrease. If you're in the stock market right now, the S&P 500 is down by about 20%, and if you're holding cash, you're down about 8% because of inflation. And so there's not a whole lot of great places to store your money right now unless you're doing some short-term trading. So that's what we're going to talk about here, and I just want to share my thoughts with you before we jump into that, though. So my strategy and my thoughts right now are that the markets are very volatile, the markets are very choppy, and it's really tough to know what is going to happen, what direction certain stocks are going to go. It's easier to predict what industries are going to do well or do poorly, at least in my experience. And so because of all of those different things going on, I am holding a lot of cash right now. I'm holding over 50% cash right now, and I am not in a rush to redeploy that cash. I am taking the hit through inflation rather than the 20% hit in the S&P 500 or a regular diversified portfolio. And I also think real estate's also going to take a larger than 8% hit. So we'll see what happens over the next little while. But as of right now, I'm keeping my money liquid and I'm keeping it mostly in cash. And I'm just trying to get the best interest rate I can through a savings account. Now, I do think that the rising interest rate environment will put downward pressure on home prices. So I think that's going to be a major impact that we're going to see start to ripple through our economy over the next few years. But I also think that the profitable growth companies will be the first to recover. The companies that are growing the fastest, that already generate net profit, those are going to be the best companies that people want to pick up first. And those are probably going to be most likely the stocks that recover first. Now, when it comes to real estate, here are my thoughts on real estate. So this is the SPDR Real Estate Index. It's basically a broad index of a bunch of different real estate companies. And as you can see, they're in a lot of pain. They're down from a high of $52 down to $38. And you can see that real estate is pulling back. There's a couple of reasons for this. One is inflation, 2 is recession fears, 3 is interest rates, 4 is all three of those are kind of combined and having a major impact on consumers. And when consumers have less money, they can afford less property, they can't afford to buy new homes, and sometimes they even have to downsize. And so all of those different factors are putting pressure on real estate. Now, one way that you can make money in real estate when it is going down is by actually purchasing an inverse ETF. So this is the one I've selected here. The ticker symbol is DRV, and it is actually a 3 times leveraged inverse ETF, meaning that when real estate markets go down, this inverse ETF goes up, and it goes up by a factor of 3 compared to the amount that the real estate market went down. And so it can give you great returns on your money. It's a great option for if you particularly think the real estate market is about to crash. This can be a great way to purchase a security without the unlimited downside and be able to make money when the market crashes. One guy that has actually done this and done very well with it was Bia Heza. He is on YouTube here. He's got a great channel. I'll put a link down below, but he made a video about actually buying this particular ETF. He bought the options in it though, which was very interesting. And he's actually up by about 130%. He bought at around $8.75. It's currently closed trading on Friday at about $20.30. So he's doing extremely well with it. And he actually shared it all on YouTube, which I thought was really cool. And he kind of broke down his analysis behind it. I agree with most of his analysis, and I think kind of the fundamental underlying catalysts that are supporting it are very valid. So I think it was a good trade. So far he's made some money on it, and I hope it works out well for him. Now, another area where you could do a very similar thing is with oil prices right now. As you can see, oil prices have skyrocketed over the last 6 months, and they're starting to fall off a cliff. On Friday, the price fell from like $115 to $107, and it closed very low. It looks like it's making a significant pullback, and even our indicators are showing major signs of a pullback. And so if you think this is going to continue, and if you think oil prices are going to go on the decline, you could purchase an inverse ETF for the oil and gas industry. This one here, ticker symbol DUG, is actually 2 times leverage. So very similar to what Bia Heza did. This is an inverse ETF for the oil and gas industry, because when the price of oil and gas falls, these companies become less profitable, which means people are going to sell out of them and the price of those companies is going to fall. And when that happens, this inverse oil and gas ETF is going to go up by twice as much as those companies fall by. And so this is another great example and a great option where you don't have to go in and analyze a company and compare the company and choose which one's going to be the best out of the 15 different oil and gas stocks. You can literally just say, I think oil and gas is going to go down, or I think oil and gas is going to go up, and it can make your life much simpler, much easier, and it's a very profitable way to make money as well. And so here is the strategy and kind of the mindset behind it. Number one is identify a catalyst. Number 2 is to understand what effect that catalyst is going to have on the market. And number 3 is to find a way to profit from the movement thanks to that catalyst. Now, just to give you an example here, let's talk about the real estate market. So the catalyst that we are looking at for the real estate market, well, we have rising interest rates, which are a major factor when it comes to your mortgage. We also have inflation, which means everything else is getting more expensive, which means if your mortgage starts to go up because of rising interest rates, you may not be able to afford it. And we also have the possibility of a recession, which means a lot of people might be losing their job, which also makes it harder to afford a mortgage. And so because of these 3 catalysts here, this is what I am going to be trading based off. Now, because of these 3 catalysts here, I think that these 3 catalysts are going to create less demand for housing, and more people are going to need to sell their house because they can no longer afford their mortgage. So these are the catalysts right here. This is how it's going to affect the market, and then we're going to make money by buying an inverse ETF for real estate companies. Now, just to give you another example here to kind of solidify this strategy for you, let's look at another example. And so let's say that we have this catalyst here where governments and consumers want to transition to electric vehicles. I think this is a very clear catalyst. You can see it across every government in every developed world. They want electric vehicles on the road, and they do not want combustion engines anymore. That is the catalyst that we are going to be looking at. Now, that catalyst is going to affect the market because the demand for battery metals that run these electric vehicles is going to increase. That is going to drive up the price of these metals, and that is going to make the suppliers of these metals more profitable. So as the demand for electric vehicles increases, the demand for batteries is going to increase. That's going to increase the price of the materials within the batteries, and the companies that are mining for those materials are going to become more profitable. So that's how I think this catalyst is going to affect the market. And because of that, I want to make money by buying battery metal ETFs. I know that the entire industry is going to grow, so I'm just going to buy an ETF that gives me exposure to the entire industry of battery metals. Now, for me, I did a little bit of looking, and there are lots of different ETFs that you could choose from. Specifically for this example, I am choosing the Lithium ETF. This is an ETF that focuses primarily on lithium companies, which is a crucial component to batteries. And so, as you can see here, it is down over the last few months, but it is up significantly long term. I think it's going to continue to go up significantly long term because lithium is one of the key ingredients that goes into lithium-ion batteries, which is the key battery form for most electric vehicles right now. All right, so you've got a couple of different ideas for ETFs and kind of strategies about how I'm thinking about the market. Let's talk about individual stocks now, and I've only got 2 for you this week. The first one here is Udemy, ticker symbol UDMY. This is an online course platform for people to get educated about how to do certain things, about how to learn new skills, and about how to get the skills they need to go out and get a career and a job afterwards. It's a great platform. I think it's amazing because it can equip people with the skills they need right from their home, right from their cell phone, right from their laptop. And as internet access becomes cheaper and more readily available, especially to the developing nations, Udemy has a market that is only going to significantly grow over time. So I really like the business model. I like the catalyst behind it. I like the company, and I like the profit margins. They're currently trading at a price to sales ratio of only 3x, which I think is extremely cheap. The stock is currently trading within a channel between $16 and $10 right now. However, we have significantly increasing and higher volume on Thursday, Friday of last week. We have a great indication of 2 green candles right here. And if we see a bounce off $10 or the beginning of a bullish trend right here, I am a buyer of Udemy. I love the business model. I like what they're doing. The second stock that I'm looking at really closely here is Callaway Golf. I like the company. I think we've got huge travel numbers coming this summer. And when people travel, Topgolf is one of the places they like to go. Topgolf is owned by Callaway Golf. And I think they have a great catalyst behind them. We also have an extremely clear and well-defined bearish trend line that is being contrasted by a bullish trend line that now has 3 consecutive higher lows. That is a very good sign, and we are coming to the end of this wedge pattern right now. So I am looking for a breakout on Callaway Golf to the bullish side, and I am looking to take advantage of this bounce off this trend line on Monday, Tuesday, if we see good market conditions and great continuation. Now, if you're interested in some free money here, we've got some cool things going on. There's $50 in free commissions if you're interested in getting into day trading or swing trading and using any of the charts and softwares that I use. It is on Questrade and the link is down below. If you're interested in buying crypto at a major discount right now, you get $25 with Newton when you sign up using my link. And you also get $25 to invest in real estate with Addy when you use my link. All of them are in the description down below. If you're interested in learning more about the stock market, I also have a completely free stock market fundamentals course. It's hosted on Skillshare. It's only 10 hours long, but there's over 12,000 students that have taken the course. And I promise you, it'll be the best free resource that you can find online. All of the information is linked down below. Thank you so much for watching till the end, and we will see you guys in the next video. Good luck trading, good luck investing, and we'll talk to you soon.